Okay, hello everyone, and thank you for joining us in the fifth KnowTalk session for the week on the margins of the International Abu Dhabi Book Fair. I'm super excited for this session where Sara and I will talk over investments, and we will go through, like, start from the pre-pandemic, pandemic, and post-pandemic phases. Before we delve into this interesting topic, let me first start just inform you with some quick messages and notes to our dear audience. Please note that this session will be delivered in English. However, Arabic interpretation is available. All you have to do is just click on the globe icon at the bottom of the page, choose Arabic, and mute original audio. I'll now just repeat what I said in Arabic for those who are attending who speak Arabic speaking audience. أهلا وسهلا بكم في هذه الجلسة الخامسة من حوارات المعرفة التي تنطلق على هامش معرض أبو ظبي الكتاب الدولي. هذه الجلسة ستكون في اللغة الإنجليزية. إذا تودون أن تتابعونا في اللغة العربية الترجمة الفورية متوفرة. اضغطوا على الكرة الأرضية في أسفل الشاشة واختاروا اللغة العربية. Hi, Sarah.
Hi, Anthony. Thank you so
How are
much for
you?
having me. Very good.
Good.
Thank you.
Good. Always ready for investment, right?
Well, that's what we do for a living. So, yes, I'm very excited to be speaking today, and thank you for the invitation for being part of the KnowTalks series
Sarah,
this year.
yeah, let me just first start by introducing you, Sara. Sara, you're the head of the Middle East at Mercury Capital Advisors, and you have been in the investment field for more than 10 years now. So let's start with by setting the scene maybe, and just asking one question which comes to the mind of the audience now. Can you describe and compare the investment landscape pre-pandemic, pandemic, and post-pandemic, if you are just assuming now that today is the pandemic? Today is a post-pandemic phase, sorry.
Thank you, Anthony. And you actually made me recap or think about what has happened in the past 2 years or 2.5 years. So in preparation of this KnowTalk, I sat down and thought, okay, what has been going on for about 2.5 years since we first heard of a virus. And we all remember that last in-person conference, or that last trip that we had before we all went into lockdown. Mine was actually in Abu Dhabi. I was on a conference, the Milken Conference for the Middle East and Africa. I think back then Wuhan was under lockdown. The first cases started popping up in Europe. And for the very first time, some people started to fist bump instead of shaking hands when we met. So I was scheduled to travel to Hong Kong. And my colleague told me, I'm not sure, Sarah, look at your email. I think you can't travel anymore because, our company released a note saying every travel to Asia, especially Hong Kong, China, and Taiwan back then, should be cleared first. So I had to change up the whole schedule, flew to Singapore. Singapore was a bit empty that time. And then I came back straight into lockdown when I returned from my trip. So until then, global markets were actually at all-time highs. I remember around February 19th was the market peak where everybody was happy, the stock market was flourishing, it was all positive signs. We already started to be very interested in digital transformation, all that companies that we've seen striving throughout the second phase of the pandemic were already set for the scene. And then March 20th hit, and we felt this free fall of the stock market in general, where I think capital markets lost some 30% in value. Well, in this span of, I believe, 22 trading days, where the S&P fell 30%, if you remember, every single, how to say, news was bad news. Uncertainty was extraordinary. The downside seemed unlimited. And so I'd say mid to end March, when governments began responding with record stimulus packages, we saw recovery in the market, especially pharmaceuticals, biotechnology. I'd say all the tech-related companies. However, this notion, there was a big spread in between those losers that kept on their lower values, such as aerospace, air travel, banking, the insurance companies, even oil and gas, and they remained down significantly, and the dispersion just grew between those high-performing sectors. We're talking about, what we're doing right now, the Zooms of the world, Amazon, Tesla, Google, all those companies that really accelerated, and where the need for technology set up was just helping to accelerate those stock prices, or the fundamentals of those companies. So the second half of I'd say, until late October 2021, to about a year ago, I'd say they recovered really their pre-pandemic stock prices, and even shoot over those. The anticipation of the vaccines back then really helped the recovery of capital markets. But as I said, the spread between those worst performers and best performance just grew from some. I did my research from some 27 percentage points to 80 percentage points today, which is really the widest in recent history. So I think that has changed today. Let's glimpse back and look at some of those that really were just pandemic winners, let's say. For example, if you remember, during the lockdown, everybody was trying to figure out ways to stay healthy and fit. So Peloton back then, really, for those who don't know Peloton, it's a maker of internet-enabled exercise bikes, and they saw their share value just increase more than fivefold. So where gyms struggled under lockdown, Peloton really delivered those e-bikes at home, and we all could mimic a gym type of feeling. But once vaccinations started to take off, and I think today the global population is about 60% vaccinated, that the need for at-home fitness just there wasn't a need anymore, and fitness centers reopened, gyms reopened, and that's really where the company started to feel the hit. And today, it seems like, so where it dropped some 85%, where it started with a 7 billion market cap, growing to 50 billion market cap, and then losing another 85% to today, shows that some of these companies that haven't set the stage before the pandemic might have just had a great run throughout, but then lost its appeal to the greater market.
Yes. So just building on what you have just said, Sarah, I think the crisis, just putting it into the context of any crisis, be it a health, environmental, or economic crisis, the direction would change. The direction of investments, they changed. The scope and the volume changed. So what are the new emerging investments, if you want, and who are the big losers, if you want, or if not, if you don't want to say losers, they lagged behind, and will there be any prospects for them to catch up with the rapid changes and signals?
Yes, now that's a very good question, and one that really excites me, because that's where I keep seeing new investment ideas and um, um, new companies emerging, especially I would say right in the beginning of the pandemic. Once after that free fall, we saw a lot of interest into artificial intelligence. I remember we were raising capital for a company that was building artificial intelligent beehives. And the idea behind it was to make sure that the environment of that beehive is always, is always well for the queen bee, which is the most important bee. And why was that so important is because it would make sure that 30% of food production would, would be secured. And that was, throughout the pandemic, that was a big issue as well. Access to food production, especially when, logistics was a challenge, essentially. But artificial intelligence also online, especially with the work from home, making sure that you could get a feel for what clients want without being able to see them physically, etc. So that was an emerging trend that as well just shoot up and accelerated. One that was very interesting was the meme investing. If you remember, it gained popularity among retail investors through social media, where the back then thought not so sophisticated investors were put themselves together and tackle specific companies and push their stock prices up, such as GameStop. GameStop was a brick and mortar retailer that had lost appeal during the pandemic because, of the lockdowns. But then those meme stocks really shoot that stock price up. I remember it was somewhere around $6 and shoot up to some 300, if I'm not mistaken. So it was just insane. But well, these were short-lived. Let's take more of the newer investment topics, such as the metaverse. That's something that everybody's talking about. Facebook is really invested, changed its name for it. And for those, and me myself, I had no idea before I started getting involved and really we were approached by companies that we are partnered up with to raise capital for them. That's really when I understood what the metaverse is and can do. And it's basically this 3D virtual world focusing, social connections, but it can do so much more, like energy generation, etc. And these guys, they're backed by Bill Gates, who is also very vocal by speaking about the metaverse is here to stay, and it's not only in labs anymore. It's not something just for physicians, but it's really becoming commercialized. And you've seen probably those goggles. They've taken these big goggles, which you essentially can walk around with, and are backing companies, for example, that doing these nice Ray-Ban-like shades or glasses, where with these features of 3D virtual connection or the virtual world.
So we can say that the direction is towards a technology. So we're heading towards a technology-based investments.
That's one. Another, and that's the one that we're seeing most, I would say, and just because also technology was such a big part of all of our lives, no matter which age group. Another, I would say, is really, if you remember, we've seen under lockdown studies saying the environment or the gas eruption, so on, have been declining while everybody's staying at home. And, the environment became one of the biggest topics that we've seen, how to, global warming is here. We cannot, and it's getting worse if we don't start acting. And it's been a lot of voices, but now we are seeing actions as well. We are involved with a company, for example, that uses liquid natural gas waste, so not the gas, but the waste of it, which usually will be dumped into the ocean. And they use that, they recapture it to electrify or energize their cold storage.
Sorry for interrupting. I think you're being disconnected. Your internet is lagging. Maybe if you can just connect to another.
Of course. Sorry.
Please. Yeah. So there's a need to invest in technology as well. Also, maybe just on the side, a side comment also in I think I can hear myself. There's an echo, Sarah. Yes. You're on mute.
Okay, I'm using my phone connection now for to speak, and then I kept the video on here. Is that better?
Yes, I can hear you well. We can hear you well indeed.
Fantastic.
So yes.
So yeah, you see internet, the internet and its technological advances keep being important, as we can see in real life.
but we're investing in metaverse. You've mentioned that there's huge investments in this virtual world, but I think today yet there's no enough investments in the accessibility and connectivity to the internet that would allow us to be connected to this virtual world, right? And because I think there's a lot of investments in this direction. So I think there's a void, and maybe I just pick another question here. Would venture capital be able to fill this void in investments?
Well, that's a very good question and a tough one, I would say. Venture capital definitely has seen high inflows. I've been on another conference where the participants were saying, whatever it is, we are highly bullish on venture capital. We invest in nearly every deal that's been presented to us, just because the valuation shot up, the returns were on all-time highs. But now with, well, as we've seen, and that's the stage actually where we are today, with geopolitical tensions, with which led to the oil price rise, with the central banks increasing interest rates, giving volatility to the stock market. That also affects venture capital, and those valuations that have been tremendously high, now we're seeing they're coming down, and there's still high demand into venture capital just because of the innovation, especially in the ESG or the tech world, where I'd say there's large interest. So I'm certain that for now they're here to stay and unavoidable. But those overpriced valuations will be corrected. And we're seeing those corrections already.
So are there any bubbles now in the market? Like can you assume there are any bubbles, like any investment bubbles that that there are some signals for you as in the people like specialists in the field? You would see some signals of bubbles that would ultimately affect the investment landscape following a crisis, which is health related. Are we heading towards an economic crisis following a pandemic?
That's a very good question, and I think a lot of people are scratching their heads about it. One is obviously inflation has been very high, and the central banks have tried to bring those down and to keep the markets simmering by increasing the interest rate, and those increases have been higher than previously, or since we after the subprime crisis, for example. So there are now measures to tackle any sort of market overheat. What I'm also scratching my head about is cryptocurrency, for example, where the proponents, the supporters kept marketing it as, it's unrelated to global stock markets, and it should work as a hedge against inflation, similar to gold. But what we are seeing now is really it's moving with the stock market. What I'm saying is, when you've seen cryptocurrency at its high sometime last year at 69,000, today it's lurking around this 30,000, so less than half of its merger price. So it's here to, and this is up for discussion with the audience as well, but whether that notion of cryptocurrency being an inflation hedge or being a secured haven doesn't seem like it. Although I would say, and this might be part of the volatility that we're in today, some governments have started to set the stage to bring cryptocurrency into the markets, but having them being regulated. The UAE is a big proponent of that, where Abu Dhabi is becoming a center for cryptocurrency companies and within a regulated framework. Others, such as the European Central Bank, has thrown words around like cryptocurrency seems to be the Wild West, and we need to, to make sure it's heavily regulated and understood and transparent. So I believe once, and since it's a very new investment as well, or part of the investment universe, or currency as well, it's to see where regulation is heading and whether we are striving for over-regulation, killing the hype and the interest, or whether we're doing it in a healthy framework, and where cryptocurrency can, in fact, or indeed lead to, being an alternative to the capital markets.
Yeah, indeed. Maybe also here on regulations and laws, how important is it? And we also received a question. Keep your questions going in the Q&A section. I'm just taking notes and just tweaking them in a single question. So how does increasing transparency and reducing uncertainty, which are very important components for investors to invest in any project or any service, around these laws and regulations are important for investors or to anticipate and to understand better the rules of the game And how important is it also for governments, because also the rules and regulations and the laws, they would come from the government, which is a very important and a critical player in the investment landscape. The financing, also financing investments, because we've seen all this discussion, just for the audience, is around crisis and pandemic. So we're not speaking about a state of nature where everything is going well, the dynamics of the economy are well. We're speaking in times of pandemics, in times of crisis, be it pandemics or not. So from where to get the financing, and transparency and reducing uncertainty and ensuring transparency.
Yeah, well, to set, well, let's take the basis, and that's as investors, we are capitalists. So the more regulation, the more interference from the government, the less natural global markets flow. That's let's say the theoretical framework. Now, however, we've seen that with disruptions, changing economies, obviously some regulation and especially transparency needs to be set. Otherwise, things like cryptocurrency can be misused. The meme investing that I talked to had only been possible because of social media and pulling together an investor base that wasn't, formed as such with heavy capital. So there is don't get me wrong, it's important to regulate, and to have regulation does make sense. Where I'm heading to is over-regulation, and that might kill the healthiness of the natural market flourishing. So we've seen that, for example, after the subprime crisis, 2008, 2009 were years of heavy regulation, where you had to document everything. It took so long to be able to do an investment that investment was already out of interest. So I think we're striving towards somewhere where the market and people in general want to be associated with good companies, with sustainable companies, with organizations. Where the organization themselves built a better world, let's say. So I believe just from the pressure of the market as such, and the people underlying it, the need for that heavy regulation just diminished, because it's more of us, wanting to do the right thing for our planet. And that can be seen with electrifying trucks or cars, or using green hydrogen to fuel, going away from the traditional fossil fuels to greener options. And then the government can be an enhancer instead of a regulator. Let's say, for example, the UAE has been big advocate, vocal in, let's look outside of the traditional energy sources and invest heavily in alternative greener options. They've even set up big funds for doing so. And I think that's a much healthier way of going about it.
From a regulator to an enabler.
Exactly.
So this is the role of the government. Yeah,
that's exactly what I'm heading to. And that's what we're seeing. There was a electric vehicle or electric car conference right next to the book fair in Abu Dhabi 2 days ago. We walked through it, and it was incredible. It was the first one. So, but it shows that governments are really trying to enable and instead of heavily regulating and forbidding.
And this would guide me into the next question, which is very important and relates to the Sustainable Development Goals and the 2030 Agenda and the better future. So, going back to the term that you've mentioned, capitalism and capitalist and being profit driven and so on. Should investments only be profit driven? Like when you are running your studies, the return on investment, should you only account for cost and revenues, or is there a new approach that we need to adopt? And what other considerations, be it environmental, governance, health, and so on, should we account for when studying a new investment, especially when discussing technological investments, investments in technology or technology-based investments?
Yeah, I think Anthony, that question has been asked a lot a couple of years ago, always, and this was always in the sense of, should ESG be part of our due diligence or part of our investment thinking, a selection? I think that question is not a question anymore. It's more of, how do we align both? How do we make ESG investments or how profitable? Or so when you look at any sovereign wealth fund, any pension fund, any institutional investor that selects new investments for their entity, there's always the question about governance, the team, the regulatory framework, so every letter of the ESG components, environmental, the social, the governance, has to be ticked before that investment can be done. So it's not a
Will
question.
Will it remain profitable? This is the question. Like, as an investor, when you embed the ESG, let's say the three dimensions that you have mentioned now, will the project or the investment remain profitable or as profitable as it was supposed to be before considering the ESG components?
Right. What I'm seeing currently is it's actually more profitable than without that component. So before, the question was always, it had to be as profitable as traditional. Now it's, if you don't have that component, you're usually leaving money on the table, where all these investment trends that we touched upon earlier, let's assume this cold storage facility that is LNG waste driven or fueled, that is a lower, we're talking about a return of around 20%. That's, and it's a ESG play, it's green, it uses the waste, it's, they might get carbon credits for doing so, etc. So even, and that's another topic, when you talk about carbon credits, that's a component that can lead to more profitability and higher returns. So I think without it, it's very hard to generate returns similar to those with it. And that comes in all components. Like, for example, if you look at teams or companies that are set the stage of being diverse, or female-led, or, you can see today that their returns have been similar or even higher than the ones that lack those components. I came across a real estate company that is majority female-led, but they strive themselves for being a truly diverse team. They were aiming for some mid-teen return. They've been killing it with double-digit returns, more in the 20th space. So it does show, and we're still in this infancy. So we need to see, this is the fourth fund. So let's look at it through even larger market cycles. But we've seen disruptions like the pandemic now, and those companies working through it and being the winners in comparison to the, let's call them the bad guys.
Yes, true. We have a question from the audience that I would like to rephrase it and frame it another way and just build on it. Abdul Qadir is saying like the financial and economic crises that are happening globally and in the Arab region, like in light of the pandemic and the war and the wars that are happening, um, should countries divert toward national investments or cross-regional investments? So should we encourage the role of regional integration in the MENA region and the need for policy reform, or should
Yeah,
we redirect our investments nationally?
yeah, that's a really good question. And I've been actually looking into a panel recently. I think Goldman Sachs' CEO was phrasing something similarly, saying, are we going from globalization to nationalization? And he said, and that stuck with me. And he said, we are truly global, and the pandemic showed that we are truly global. And it's like if you're taking a scrambled egg and you're trying to unscramble it, it's nearly impossible. So it's interesting because you've seen part of the world during the pandemic locking up completely, and it helped their economy in the sense of the usual exporters will keep their export internal, use them, and the economy was fine. But in general, and we're seeing it now with geoeconomic tension, where we are having disruption in supply chain, etc. Purely nationalism seems not to work. We are too far away from it. We are already truly global. Look at us. I mean, we're here in Abu Dhabi, Dubai, Lebanon, and the rest of the world. I know my colleagues from London, from India are eager, or some of them have probably joined. So it's very, very difficult to say, let's go back, and nationalism or staying within our borders is actually the right way to do business. Although it has shown that some part of it, it's not bad to also invest in your own regional economy.
Yes, that's the answer I was looking for. Encouraging and supporting cross-border and regional integration, especially in the MENA region, because this would ultimately support entrepreneurship, creativity, and innovation, which are the enablers of a good and a healthy economy in times of pandemics.
Correct, Anthony. And this was really not a question that we phrased before. I'm very surprised that this came up.
Yeah.
But look at this, for example. You've seen the Chinese crackdown on their own companies. And so a lot of those have looked to expand globally. We've seen a company or, a venture capital enabler, let's say, that saw this and took those Chinese companies and helped them to set up here in the region. So they're setting up here in the Middle East, in Saudi Arabia, in the UAE, and the likes, and bringing that Chinese technology to our region, where we are really in need to build this infrastructure, this tech infrastructure. So I went to one of those companies that they're backing to do my due diligence. And what I saw was, 60 young Arab girls and guys around discussing and brainstorming, and in between those Chinese people that help with the knowledge transfer. It was fantastic to see that. So it's, because of what's going on globally, I think we've been in a good spot to be a little bit not as correlated with the rest of the markets, which has helped us to bring in also external talent and to give them a home here, which helps our VC world, our local VC world, tremendously.
And here, I think there's a strong, maybe, and significant correlation, if you want, between the importance of investments in times of crisis and the transfer of human capital and expertise. And I think this ultimately would support in the realization of a 2030 agenda and reducing poverty, increasing employability, and so on. So the recovery, I think, maybe you would agree on this, Sara, that the recovery should ultimately concentrate on reconsidering our economic integration regionally and even globally, and because this is the only way for us to get out of any crisis, right?
Correct. I absolutely agree. Absolutely.
Yes, and the last 2 minutes before we conclude this session, I want you to zoom out a little bit from the micro investments to the macro level, foreign direct investments. What are the trends? What are your key messages and final insights on the foreign direct investments? Over to you.
Okay. Well, zooming out, I would say in general, yes, we are in a phase of a little bit of uncertainty and volatility, but in general, the market direction is, the market is going into the right direction, you know, and we can use catchy phrases like investing to save the planet, or you know where I'm heading to. But I really believe that having not only discussing these topics, but really embedding them now into all of our portfolios, and developing and creating these newer environmental and social, great companies is really what excites me. And I believe we are heading in the right direction. I don't see a crisis per se, but I also don't have a crystal ball. Otherwise, I would be somewhere else probably. But just to summarize or frame it, all these newer trends, solar energy, green hydrogen, electric vehicles, being a good corporate citizen, giving employees flexibility within how to work and where to work, but still preserving this human connection and knowledge transfer. I think that's where we're heading at.
Perfect. So one last quick question. It's a yes or no. Should we invest in times of crisis?
Well, quick answer is yes. And yes, because obviously crisis also always leads to opportunities. So
because there are risks, and risks are associated with higher returns on investment, or because with risks with the crisis comes opportunities, new horizons, and so on.
Both. If you fundamentally believe in a specific region, company, currency, or what have you, and the fundamentals are right, a crisis does help in the sense of, lower pricing and entry points, but also a crisis as ours just now showed us that new developments in technology lead to, newer products and innovation that 10 years from now, probably we won't be able to live without anymore.
And by that, we conclude today's session on investment in times of crisis. Thank you for the knowledge and insights, Sara. Looking forward to benefiting from your expertise in upcoming sessions as well. And for our dear audience, stay tuned. We still have 2 more sessions scheduled tomorrow and on Sunday at 12 Dubai time. Goodbye.
Thank you so much, Anthony. It was really a pleasure to be here.
Likewise.